Money market funds, MMFs. What is an MMF? An MMF is a collective investment scheme whereby funds from different sources are brought together in a pool and invested in different asset classes such as treasury bills, commercial papers, and fixed deposits. They are invested by a professional fund manager who is regulated by the Capital Markets Authority, CMA. Why should you invest in an MMF, or what is the benefit of an MMF? The first benefit is higher returns, which is higher than the standard savings account interest rates. On average, they range between 4% and 10% per annum, but it's always good to inquire with the fund manager how much interest they pay, depending on, it could be prorated, it could be depending on the amount that you're investing. Second benefit, low starting capital. You can be able to open an MMF account with approximately 3,000 shillings and above. The third benefit is that they earn interest daily, which is compounded monthly, and you're able to earn this interest or withdraw it when you're withdrawing your investment. The fourth benefit is liquidity. That is, when you invest in an MMF, you can be able to access your cash flexibly or easily, but it's always important to inquire with the fund manager the conditions for withdrawing, because some may require to give a few days notice. And then the fifth benefit is security. MMFs fund managers are licensed, they are regulated, and they are audited regularly, which helps protect your investment. The sixth benefit is that they help beat inflation. Depending on the interest rate that you've been able to secure for your investment, you can be able to find that the amount you're going to earn at the end of the day could be able to be higher than the inflation, enabling you, cushioning you against the impact of high prices of commodities in the market. What is the cost, or what are the costs of investing in an MMF? One of the costs has to do with the management fees, that is investment fees. On average, they can be around 2% of the amount invested, but it's always good to inquire with the fund manager how much they are charging. The second is the withdrawal fees. Inquire if they charge any withdrawal fees. It could vary across the fund managers. The third cost is the withholding tax. That is 15% withholding tax in Kenya for any investment that you earn. So it's always good to consider this, because this is a mandatory cost. It will affect how much interest you're going to end up with. And where can you invest in MMF, or which institutions or organizations offer MMF accounts? One of them is CIC, second is NCBA, third ICEA, fourth Britain, fifth Sanlam, and UAP. There are others, but I only listed a few, so it's good to research and make a decision before putting your money in. Then what are the account opening requirements? First, you need a passport photo of yourself. You also need a copy of your ID or passport. You also need a copy of your PIN certificate. You also need to provide the MMF fund manager with your bank details. And lastly, you need an MMF application form, which you can be able to get from the institutions I mentioned, or from the institution that you prefer investing your money in. See you next time.